Everyone, and welcome to this afternoon's webinar. And if you were with us last week, you may have heard me mention that we weren't sure whether we were going to be here today because our daughter is, we're just waiting for our third grandchild to be born. She still hasn't arrived. She's decided not to make an appearance as yet. I'm sure it'll happen any day now, but I think we decided that trying to predict the arrival of a baby is probably as accurate as trying to predict the lottery. But for us, it's better than a lottery win. Anyway, thank you so much for taking the time to come and join us today. Lots going on, not least Jerome J. Powell is up in before the one of the committees up on Capitol Hill, and he's actually on a live broadcast. So we're just looking at some market reaction on that. He's taking a question and answer session. He's done his statement. It's the second day of a traditional two-day hearing that the Fed chair is presents himself before the lawmakers. Anyway, that's going on in background. There's been quite a lot of fundamental news, and there's still some news to be released after, while he's speaking and after. But as always, before we start, as you know, trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. Now, I'm here. David is here. We've changed the. We're not actually next to each other. We're sort of back to back. We changed the configuration of our trading office, so it feels very strange. He's behind me at the moment, so I think I'm going to have to put a mirror up so I can see what he's up to and look at his charts. He's laughing. Anyway, what's happening? Very quickly, let me just, in case those of you who are interested, this is what's going on. You won't be able to hear it because of the GoToWebinar. This is the question and answer session that has now started. He's had the statement has come out. From yesterday and today, there's all sorts of interpretation of what he was actually saying. Has he kind of become more dovish in the sense that, well, certainly they're not going to be, interest rates are pretty much where they are at the moment. It's really a question of, in the December meeting, is there going to be a further cut, which is certainly something that President Trump would like, and possibly the market as well. Just having a look at investing.com to see what the reaction is so far. The S&P, it's all fairly flat at the moment, actually. The Dow is up slightly. The NASDAQ is just under 13. It hasn't quite slipped into single figures yet, as you know. One thing we always have to try and establish when well, certainly if you're a day trader, and that is, what kind of trading, what kind of market condition are we likely to face today in the session that we are, that we're looking to trade? What do we look at? What can we consider? There's the price action, obviously, of the charts, but, the price action on the chart is driven by a whole host of factors, and the most important factor is, I suppose, to consider is, are we in kind of broadly risk on, or are we kind of broadly in risk off, as it were? And we look for these clues outside. We look for the clues in outside of the chart that we're trading, and we look at other markets as well. We obviously look at the VIX. What else is there that we can have a look at? Well, if it's risk off, we look at gold, T-bills, the dollar, yen. You also look at in the stock sectors. There's money flowing into the utilities, more defensive stocks, as it were.
Sorry, Anna's just having a coughing fit. Good afternoon, everyone. Well, it's afternoon here. It might not be afternoon where you are. Good to have you along. Are you okay to carry on, or? Yeah, I'm just going to pass back to Anna. Sorry about that. She just switched off.
Sorry, when I said that the market is in risk-off mood, in the sense that it's very concerned about the market. Those are the kind of markets and instruments that it'll be moving into. And when it's decided that, it's decided that it's time to put more money on the table, chase higher yield, higher returns, then it's going to look at what are we going to have a look at? Well, one market is junk bonds, the FANG stocks, for example, more volatile stocks, momentum stocks, and the Russell 2000. Now, at the moment, markets are, they are embracing risk. As we know, the indices are at, all-time highs, but that comes with another another set of problems, another set of issues, as it were. As we always say, traders and well, investors, not so much traders, because as traders, you don't really care if something is going up or down. You just want to make sure that you're on the right side of whatever trade you want to take. But certainly for investors, everyone becomes terribly nervous when markets break out into these fresh highs. Is it going to carry on? It's 11. This has been an 11-year run, as it were. Fueled by cheap money. We won't go into the politics and the central bank issues at the moment. All we can see is what we see on the chart. Can it go any higher? Those of you who have been with us for the last 2 or 3 sessions will know we looked at the Dow. We looked at the huge long consolidation phase that we had seen on the monthly charts for some of the indices, and David and I nailed our colours to the mast and said, no, this is not distribution. We're not seeing the start of a massive reversal. In fact, we were seeing the exact opposite, and it was down to the chart pattern, the candle patterns that we could see, the volume that we could see under those candles. There were wicks to the bottom of the candles. Now they have a huge platform of support. And where is it all going to end? We've got Christmas coming up. No one wants to see a repeat. Certainly investors don't want to see a repeat of what happened. If you remember last December, Santa, very much a slave, didn't even get out of the starting blocks. Although if you look at the candle, the December candle for the indices, yes, there was a big fall, big correction, but there was a big spike to the bottom of the candle. The month ended very, very positively, lots of buying coming in, and by January the markets were up once again. So, as I said, we have to be aware of everything that's going on around us. We then look at the charts and we say, what is it? How can we take advantage of what we can see on the charts? Factoring in the context that the chart is actually trading. And the reason I got the pound Aussie up at the moment, because what we've done, obviously we use volume price analysis, but we've developed some very specific indicators to help us, particularly for a kind of re-entry, because the issue is when you see a chart that is looking, it doesn't show any serious signs of a reversal, but is looking to keep on marching higher and higher. You as a trader, well, you've got 2 options. If your preferred trading tactic is no, I only trade a reversal, I don't feel comfortable looking at a chart that's just, I don't want to join a trend, I just want to see a reversal, and get a significant portion of when that, because everything reverses eventually. But sometimes you can be staring at a chart and looking, and it may reverse, but not sufficiently to, to warrant either taking a trade, or it reverses and then blow me down. It just carries on in the same direction. So, that is a tough decision. Or as a trader, you could say, well, recognize what you're looking at, recognize that you're in a strong trend, and, look for a potential entry points. What could you be looking at that will give you the confidence, say, yeah, some people call it buying. I'm not going to use the expression buying the dip, because it's much more nuanced than that. It's not so straightforward. I'm not looking for a pullback to rejoin the move. I'm looking for a particular sort of construction on the side, on the chart, to say to me, right, this is a potential for a move higher. And really what I'm talking about is when I'm talking about congestion phases, and I'm talking congestion phases that spawn, if you like, the start of a significant trend. Now, a significant trend can start for all sorts of reasons, fundamental reasons, sentiment, a particular piece of a particular release, or it could be a combination of those factors. Now, this is, and please, whatever chart we're looking at and we're analysing and we are considering, whatever we say in these sessions, and it applies in the forex session and this session, you can apply to anything. It doesn't, you know, each market will have its own unique characteristics. So, you know, in forex, you know, yes, it is a pound Aussie, but the principles of what we are explaining and showing will be identical to whether this is the pound Aussie, whether it's an index, whether it's a treasury, a stock, an exchange traded fund, an ETF, or a commodity. Anyway, consolidation phases, and not only do we look at them for you know, clues as to when a trend may start. You will get a possibility, as we see here. This is a this is the hourly chart for the pound Aussie. We've looked at this chart before. You can see the consolidation phase that's been on this chart. This is Monday, by the way, and this is the volume point of control. This indicator was down here on Monday, and this was the breakaway from the point on the chart where it was, if you like, in agreement, in balance. So we had the breakaway, and since Monday we've had this consolidation, some volatility within the consolidation phase. Why? Because we've had the volatility indicator triggered. We've got, you know, some, you know, significant wicks to the candles. Then we had an attempt to break on a volatility candle. In the faster time frames, that would have no doubt produced, you know, a tradable opportunity, but didn't get very far. Support and resistance came into play, and back down it came. Now, this was what has happened overnight, and there was a combination of factors for this. There was employment news for the Aussie, not very good news for China. And obviously, we've the British element, the British pound element in this pair didn't actually affect this move because you know, there was no election news that would affect the pound during the Asian session. So, if you like, all those factors are combined. Volume came in. It doesn't look like it's very high here because you know, it is just over the average line. But you have to read this in context. This volume bar here has been distorted by the volume that's been piling in since this early move, because obviously there's more liquidity when Europe and London get underway. So there we are. You're faced with this. This is a fantastic move. I think the move so far is about 120 pips. You see that, maybe you've come to your screen, well, what do you do? And this is where you again look at the principles of congestion. Is the primary trend going to carry on, or are we going to get a secondary trend? Are we going to get a micro trend? Are we going to get a potential reversal? Now, the VPOC has actually moved away. It has actually, because it's dynamic, it moves up and down. This is on the 12-minute chart, and you can see here, this is what happened as the initial move higher. And in fact, the periods of congestion that this has stayed haven't been long enough for the VPOC to move higher, because this is what it does. So what we do, we go down to the even faster time frames, and your potential points of re-entry would be when this trend is carrying on higher. But trends don't go up in a straight line. They don't go up and they don't go down in the straight line. They go into this consolidation phase. So when you see this consolidation phase, as characterized with the volume point of control, with the indicators such as the trend dots, such as the trend monitor, then that could be perceived to be a potential to re-enter. And why do we know it could be a good entry? Well, we have this support platform created by the volume point of control. If you go to the 12-minute chart, we see that it is still in an uptrend. Where are we? Sorry, not the 5-minute. Where's the 12-minute chart gone? I've lost it. 12-minute chart. There we are. If we look at the 12-minute chart, it is still actually in, and we've had this consolidation. It it attempted, if you like, for a secondary trend. It never really went into a secondary trend. It's a bit messy, I accept that, but it carried on, it's been carrying on higher. And then we go all the way up to the hourly, that hasn't moved. So what is it telling us in terms of trend, if you like, primary consolidation and secondary trend? Well, there is still, there are still some pips to be taken out of this move, which actually started back in the Asian session. And the only way you can confirm that is, as I said, is by going down the time frames and looking at the points is where you get this basing, where you get these congestion phases in the faster time frames, and looking to see whether it is going to break higher from there. So at least you have the opportunity to take these little slices of price action, because as traders, you're never going to get everything from the beginning to the end. This is a constant oscillation, and you're talking about waves here, and if you can capture a bit of that wave either to the upside or the downside. Now, what we also, certainly on the faster time frames, I have a Renko chart, which is a non-time based chart, and again, this is what I would use. I would use it with the trend dots, with the trend monitor. You can see here the trend higher has not been consistent. We haven't had a solid blue all the way through. There have been pullbacks, there have been corrections, if you like, but it's never translated into a bright red. So not an easy trend to trade, as it were, but has been tradable. Now in forex, we've developed specific indicators to help us identify the relative strength and weakness of the individual currencies in terms of the money flow that's going into them, what we call the currency strength indicator, and this is the hourly one. And you can see here, this is the Aussie dollar. We've had a constant, we had this one attempt to rise, but look how oversold it is. It's really way, way beaten down on this particular time frame. So what is that telling us? At some point, it is going to reverse. So if you're looking for a reversal, certainly on the Aussie dollar, well, you're going to have to be a little bit more patient, because markets can stay oversold as it is here and overbought for an awful lot longer than you and I can stay solvent. And look at the British pound here. This is continuing, it's fairly bullish. The election, our election campaign is underway. Markets are taking the view that there is likely to be a government majority come election day, and that at the moment is still seen as a positive for the British pound. As I said, what I've just said applies whatever you trade. It doesn't matter. This just happens to be forex. Right. If you've got any questions, please just drop them into the chat box. For those of you who haven't come along before, very quickly, if I can find my, where am I? Here it is. The indicators that I've mentioned are from quantumtrading.com. At the moment, they are available for MetaTrader Form 5, Ninja. David's got the Ninja Trader platform. Have you got Tradestation up as well, darling? Yeah. Yeah, and TradingView, but we are working on Tradestation. And I think David has got, I think he's got the futures contracts for the currencies on Tradestation. But when we pass over to him, we'll see what's going on. And with regard to, what was I going to say? Yes, my analysis of stocks, different markets, what I've been saying about what happened this morning, you will find on the front page of my personal site, which is annacooling.com, and also all details of the books that are up on Amazon, which explain our methodology of volume price analysis. So as you can see here, that's what we did this morning. We also looked at the euro, actually. That was also a nice move, and just everything, anything that I think you'll find on here, whatever I think traders may be interested in learning about the markets and really how to apply it to their own trading. Can I pass over to you now? Okay, I'm going to transfer over to
If I can find my chat box, there we go. Show my screen. Just move that out the way. Zip that down. I'll just turn around. You should be seeing my screen. There we go. I've got Ninja up at the moment. Thanks, darling. While Anna's been talking, I've just been watching what's going on in terms of broad markets, in terms of the indices, commodities, what's going on in terms of the VIX. Is Powell still talking, darling? We'll just go and check if he's still talking, because it's a bit of a lottery when you've got one of these going on until he's actually finished and the market's settled. Anyway, while Anna's checking that, this is basically the three sisters, as we call them, the YM, the NQ, and the ES. Top line, they're on 5 minute. Bottom line, they're on the daily, and all pretty self-explanatory. It's been pretty hard graft over the last few days. That's pretty indicative of what we're doing at the moment. Today is shaping up in a similar way. You can see they're up at the top on the 5 minute. All of them are trading around the volume point of control, which is the yellow dashed line. I'll open up one of them. This is the ES. This is the S&P 500 futures contract. He's still talking. Okay, so at any point, any word or phrase or anything he may or may not say will be reflected in the price action. So it's always a question you have to decide in your own mind when one of these is going on. Are you going to trade in there? If you are, then you've got to be aware of the fact that you could get cut to ribbons purely on a single word or phrase, which is just impossible to forecast. So it's no, he's not a terribly excitable chap. So you know, but there we go. It's just something we have to live with. So if you're desperate to trade, then and your risk profile is perhaps you want to be a little bit more cautious, then it's best to sit on the sidelines at the moment and wait till he's finished. Wait for the market to pick up direction. Wait for volume to confirm, etc., etc., etc. So that's where we are on indices. We'll keep an eye on that for the time being. Come back to that in a moment. Let's just go and have a look at the. Actually, let me pull this across. This is probably easier. This is on Tradestation. This is the VIX, which I've got on primarily the faster time frames. This is the 2 minute, this is the 5 minute, this is the 10 minute, this is the VIX from the CBOE. I've got a Renko running down here on the same contract, and I've got this is the 10 minute. Sorry, I've got replicate there. I don't know why I've got 2 10 minutes. This is the daily, which just gives you an idea of where we are in terms of move that out of the way. I'm sure you know the VIX falls and equities rise and vice versa. So it's an inverse. It's a fear index. The further it falls, then the stronger is risk sentiment. If it's rising strongly, then it's risk aversion. But at the moment, we're trading in the congestion phase. If the market is really going to continue that much more strongly to the upside, then the VIX has got to drop below this platform that's building around 12. And we go back down into 10, where we've got some pretty strong support around. And thereafter, we're down into single figures. And once you get down into single figures, then everyone's very complacent, and the market is looking for a major top reversal or blow off, whatever. So that's where we are in terms of the VIX. And in terms of intraday, you can see it here flip-flopping around. We've had, this was 2:30. This is when markets open for us. The cash markets open alongside Globex. And I've said it many, many times before. If you're trading indices, a lot of people say you can't trade Globex in isolation. Personally, I think that's a load of hogwash. Everyone's entitled to their opinion. I'm entitled to mine. That's my opinion for what it's worth. If you're trading these regularly, you'll find the price action, generally speaking, on Globex alone will be more even paced, less volatility. As soon as the cash markets open, you get the usual dramatic increase in volatility, a lot of whipsaw price action over the first 10, 15, 20, 30 minutes maybe, and you have to wait for that to pass for the markets to settle, primarily because you're seeing all the algos open up and trading, particularly the ES and to some extent the NQ. I'll hop just see what's going on. Not a lot at the moment. Okay, just pop that back up. Sorry, let's take that out full size. Just move that there. Just to go back on to where we were this morning, this was the currency future. This was 8 o'clock our time. We opened up the webinar here around 7:30. This is on euro. This is euro dollar. This is the currency future contract, the 6E up here. I've got the currency strength indicator over here on 2 minute. Obviously, it didn't look like this at the time. It was a completely different shape and structure. But essentially, this was the move. We had a nice run up. This was basically driven through a piece of fundamental news, which was essentially not as bad as expected for Germany, which technically had not gone into recession. It was a technical recession, but avoided largely. But that was enough to give it a little bit of a lift. And I said at the time, what we're looking for is reversal. The reversal duty came, but again, it always comes at a price. You have to wait for all this whipsaw and congestion to build. But the advantage is if you're going to take a reversal position, then you're getting in early. You have to set wider stop losses. You've got to allow for all this sort of price action, but ultimately you get in much higher. Those traders who jump in low are not going to benefit from the full trend. That's the nature of trading. It's as simple as that. This could have gone on a lot longer. I have to say this trend was pretty sluggish. We went from 30 down to, I don't know, 12, 10. So it's only 20 pips, and this was over 9. So this is like 3 hours in here. So it's pretty sluggish for a move to the downside. Nevertheless, it's there. There was money to be made, and it was pretty clear and signaled. So it's just a question of waiting and being patient. Just going over to the dashboard, because on the dashboard here I've got the currency heat map, which is one of my favorites. Now, just to highlight on here, the pound Aussie, this is one of Anna's go-to currency pairs. It really does move. It really delivers. And what's really nice about the heat map is that what you see is the development of bullish and bearish sentiment across the time horizons. Apologies, this is in development at the moment. This should have the times on here, but basically this would be 1 minute out to 1 month. And what you're seeing here is really a pictorial representation of whether sentiment for that particular currency pair is shifting from bullish to bearish. Is it extending out? Is it retracting? What's it doing? Are these numbers increasing? Are they falling? So is the strength of sentiment rising, or is it falling? And it's just a great pictorial representation. And you can just look at it, and you get a very, very quick feeling for what's moving, what isn't moving. You can obviously isolate out here. So if you want to isolate out the pound pair, see what's going on in terms of pound, any particular pair you choose, just isolate out the Aussie. Aussie's been absolutely hammered at the moment. Aussie Swiss has been a fantastic trade, really widespread down candle on the day. You can see it here, it's bearish in every single cell from the 1 minute right the way through. But that will change. And the other aspect to it is when you're looking at the ranking ladder down here, these currency pairs are weighted according to the time frame across here. So a 1 minute time frame will carry less weight than an hourly time frame and a daily time frame and so on and so forth, which is common sense. So basically, when they get down to these extremes, it's a great position to look at for if you're a slower term trader, if you're looking at, perhaps you consider yourself a swing trader of slower time frames, then you're looking at the ranking ladder, because these currency pairs are not going to hop up and down here every 5 minutes, as indeed they do over here on the currency matrix, which is on 5 minute, because they're weighted according to the bearish or bullish sentiment across these cells. But they will move. They maybe move 2 or 3 slots in a day, or maybe 4 slots, but over a daily couple of days, they will move maybe from one end, maybe up to here, maybe over the week they'll be up the top again. So it's really an indicator that has 2 aspects to it. The first is an intraday, gives you that instant heads up on strength and weakness across the time frames without having to have all those charts up in multiple monitors. And secondly, it gives you a ranking of the bearish and bullish sentiment in a much slower time horizon, if you will. And of course, you've got the CSI there as well. Just go back onto the CBOE. There we go. See what's going. It's picking up a little bit, so there's probably going to be a little bit of, just move that out of the way, bearish sentiment coming in again. Let's just go over onto the multiple time frames. I've got the NQ set up, and I'll go over on the tick charts as well. Here we are. And if you want to trade in these sorts of market conditions, I've said this many times before as well, this is a 15-second chart. You may be horrified, you may not be. It's actually one of my favorite time frames for trading in relatively narrow markets, because it's premised on the fact that you have good execution. We use interactive brokers. Generally, typically speaking, on the YM, for example, we might get a point spread. On the NQ and the ES, it'll be a quarter, so it'll be a quarter tick spread. That's your ticket for entry. So if you're looking to scalp, it's perfectly feasible, but you've got to have a good broker and an excellent execution. And I can also say you also have to have this set up almost like an EA mechanically. You cannot afford to, I was going to swear there, you cannot afford to mess around and pick out positions for stop losses and all the rest of it. You have to just bang the order in with a hard stop, get in, get out. It's as simple as that. You, generally speaking, if you're trading slower time frames, what you're going to be looking at, for example, here, if you were looking at this now as maybe a short position, you'd perhaps be considering this level here. Maybe you want to go in a little bit higher. Maybe you want to have a bit of protection up here. You don't have that time. It's just not available to you. You have to decide what your stop loss is going to be. It's what we refer to as a hard stop. It's how we started. We started trading index futures with a 5-point stop loss. It was there was no discussion. There was no analysis of the chart. It's just bang, 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 get the order in, and you try and adjust the stop loss according to market conditions and what your risk profile is and everything else on a daily basis. But essentially it's fixed, and you just go in and place the order, and it's the same for getting out as well. You've got to get in and get out quick. It's got to be an almost automated process the whole time. It's a little bit bearish at the moment. There is some downside momentum just taking hold, starting to see a breakaway from the volume point of control there. Just refresh that one. Why the VPOC's dropped out on that one. So we can get that back again. There we go. Okay. So let's just stick with the 15-second. And what you're going to see is the sentiment will ripple through from the fastest time frame. This is your fastest time frame. We've got this at 2 minute, this at 5 minute, this is at 15, this is down on 60. That's a long, long way out from when you're trading right down at the coal face at this level. Got a little bit of buying coming in under that candle. You can see it there on the volume. And this is what I mean. You have to read these charts quickly. You've got to interpret VPA very quickly using the indicators as well. The trend monitor is going to help to keep you in. Let's have a look at 2 minutes. Let's pop these up full size, make it a little bit easier to read. What have we got on the chart here? Well, we've got, this is the volume point of control. These red and blue levels up here are price-based support and resistance off the accumulation distribution indicator. The wider the line, the stronger those regions. So this is a very strong level. This is done automatically by the indicator. So every time it's tested and held, then the line thickens accordingly. So it's just, again, it's a very visual way of, you don't have to draw lines on charts. It's all done for you. It just delivers the information you need very quickly. It's telling you this is a very strong ceiling of resistance in place, and if that's going to be broken to the upside, it's going to take some effort to some volume to drive through there. Below, we've gone through this relatively minor level. We've got a slightly stronger level coming into play. Trend monitor is still red. The trend line's diving. We're breaking away from the volume point of control. Plenty of resistance in around there as well. Also, we've got 2 levels here, so we've got a whole cluster of stuff around here. And if this is going to break to the downside, then we will need to move through here. If we break through there, then we're down into a low volume node here on the volume point of control. Because volume works in exactly the same way as price-based support and resistance. It's exactly the same principles. If you've got high volume in an area, then it's going to act as either support or resistance, depending on which way the market's going. If you're coming up to a low volume area here, as we are, then that market should move through there relatively quickly, because there's very little in the way of volume to present a barrier to that particular move. And we've got a very light weight of price-based potential support down here as well. Lots of indecision, nothing very straightforward at the moment. Indecision on 2. Let's have a look at 5, going out down the time horizons. More indecision, more wicks to top and bottom. We've got a little wick here, we've got a big wick here. So it's you know, this is not a price waterfall. This is moving south, but it's not moving south with momentum. Let's go down onto 15, which actually seems like a crawl. We opened up. This is where we opened up at 230. This is Globex. There's absolutely nothing wrong with Globex volume. You're comparing like with like, but as soon as the cash markets open, obviously you're going to surge in volume. And we got the volatility trigger, which is inevitable. We see it all the time. You're expecting the market to congest. It has. It's reversing. It's gone up to the volume point of control. It's coming off again. Don't know whether he's still... Is he still talking?
Yeah, he's still talking.
He's still talking. Okay. So until he's finished talking, we're probably going to see more of the same, unless he says something exceptional, which actually delivers some momentum to it. Just hop over. I've got a tick workspace as well, which will be doing pretty much the same thing, probably sluggish. This is on the NQ again, and it's delivering. This needs to be speeded up. This is 987 tick, and this one is 2584. There we go. It's not too bad actually. But again, you can see this is the tick speedometer. I won't go through it in detail, but essentially it's delivering the optimal tick settings for these charts. If you've never traded on tick charts or a Renko chart, they are both time independent and therefore reveal raw momentum, which you don't see on a time-based chart. And that's why traders like to use them either in isolation. You can use them as freestanding or in combination with time-based charts. And for us, what we've done here, we've really integrated volume price analysis, because up here we've got the 1 minute time frame, which is delivering the tick setting for us up here. It's also telling us whether the market is sluggish or not. Where you see it printing slow and it's in red, then it's telling us very sluggish market. The tick activity is low. But it also gives us the opportunity to blend volume price analysis, in other words, from a time-based chart, with the advantage of trading on a tick chart, which is independent of time. Same principles in terms of indicators. Trend monitors bright red. Trend lines flip-flopping around, not particularly strong, but it's certainly below the fulcrum line here. We've got a price-based support come into play there, which is just being taken out. We've got a low volume node here coming into play, so we expect that market to move through there pretty quickly, and so on and so forth. And again, the principles of multiple time frames, you know, we're talking about multiple tick charts here. It's exactly the same. Starting to pick up a bit of momentum. You can see we've got some activity coming in here. It's changed to fast. We've got a big pickup in volume. Want to see a nice widespread down candle, lots of volume, lots of selling under that candle, which is good. Let's hop back onto the time-based charts. There we go, nice move developing, nice breakaway, nice move, really nice move on, here we go, on this is on the 15-second. This is perfection. That's what you want to see. That's a textbook example of a price waterfall. They don't come any better than that. You've got rising volume, falling market, widening spreads. Perfect. Couldn't be any better. Couldn't draw one better than that, to be honest. Now you've got another effort to rally. You've got a wick to the upper body, decent volume under that. Bit of profit taking in there probably. Trend monitor still red. See if this is going to carry on. Not a terribly strong rally. Falling away the volume. It's okay, it's decent enough. But the general trend at the moment is to the downside. The trend monitor's signaling that. It hasn't transitioned into anything else. We've got a very minor level of support coming into play. Nothing too substantial. We want to see it break through there. We're going to see a further move up onto 2 minute. Nice widespread candle. Lots of volume under there. Tiny little wick, so no real anomalies there. No heavy buying in there. Really nothing to frighten the horses at the moment. But it's all dependent on Mr. Powell. Maybe he said something. Maybe he hasn't. Maybe he hasn't said something that people thought he should have said. And on we go. Up onto 5. Trend monitor's red there, it's fine. Trend line's diving away nicely. It's all pretty good. Up onto 15, very slow on 15. Obviously, if you're coming off 15-second, it's like a different planet. But it's what you're comfortable with. You may be freaked by even seeing a 15-second chart. The Ninja Trader goes down to 5-second, and I think also goes down to 1 second actually. Yes. I must admit that's not something I've ever played with, but I'm sure there are traders out there who do use a 1 second chart. I think there comes a point at which it becomes a little bit meaningless, and it's trying to approach the tick activity, if you will, when you're getting down to that level. So I'll just switch over to tick charts. 15 second is about as low as I would go personally for meaningful charts. Okay, I mean, these are decent points, remember. You know, we're coming from 40, we're moving down to maybe 30. This is 10 points on the NQ. That's a decent amount of money, assuming you're trading one contract. If you're trading multiples, then, you know, it's big bucks. And that's the other point. If you're trading on a 15 second, if you're trading, the corollary is that if you're only going to take small numbers of pips or points or ticks out of the market, then at some point you're going to have to gear up and put bigger contracts on, because otherwise, for sure, you will be making money, but if you want to trade those faster timeframes, then you need to put larger contracts on. That then raises the issue of how you want to trade it. Are you going to trade in? Are you going to scale out? Or are you going to scale in? Have you got time to scale in? Probably better scaling out, taking this approach. In other words, you're putting on a lump of contracts and then removing them as they move into profit, hopefully. Okay, it's all fairly bearish at the moment. That's on the daily. Oops, sorry, it's just gone out of the way. Where's that gone? That one. Sorry about that. That's because the chat box is in the way. There we go. Get that out of the way again. There we go. Yeah, I'll just have a look at the comments. Sorry, when I'm in full flow, I tend to have the chat box closed. I'm not ignoring you. It's just I like to concentrate on what I'm doing. I'm just looking over on Tradestation on the CBOE. This is what we're seeing. We're seeing this reflected on the index, which is why if you're trading these indices in any great shape, you've got to have this up somewhere. You've got to have it on a fast time frame to see what's going on. So we've got the CBOE rising, and therefore you can see exactly what's happening. We've got the trend monitor. We went into transitional colors here, and now we've come out the other side. We're in blue. This is on the 2 minute. The 5 minute, we've had the transition through as well, so we're in blue here. Up onto the 10 minute time frame, we haven't come out the other side yet, and that is to be expected. This is the analogy I've used so many times, you're probably tired of hearing it, but it's the pebble in the pond. You throw a pebble in the pond, and the ripples from that effect come out and away from where the pebble lands. It's exactly the same with trading. Whatever your fastest time frame is, it will start there. It will ripple through to here and over to here and ultimately right the way through. And of course, if it's a major change, it'll go out to the dailies, weeklies and monthlies and so on and so forth. But that's the principle. It's very, very simple. And it's a great way of using the trend monitor. I haven't got the trend dots on here at the moment. We're just doing a bit of tweaking on those. But the trend dots are working exactly the same way. The trend dots with the trend monitor work perfectly in these situations, because the trend dots change first and then the trend monitor kicks in. It takes a more considered view of what is going on. So that's what we're seeing on the CBOE at the moment, which is why we're seeing this kick down. When you're trading any market, you need every bit of information. It's all there. You just have to find it and have it on the right chart. Sorry, let me answer the questions. Beg pardon. Right, another 5 minutes. I'm time limited today by Anna. Right, let me have a quick look. Where are we? Let's go right the way back. Hago, what moving average do you have on your chart? I tend to not to use them, Linton, as I'm sure many of you know. Anna does. I'm not sure what her latest variant is, but I will find out for you in a moment. But can I just make the general point that there's no magical moving average that works in all markets, all time frames, whatever. And you know, we haven't got a magical moving average, and I don't think any other trader has one. What a moving average will do for you, irrespective of what time which one you choose, whether it's an exponential, whether it's just a simple moving average, whatever, what you will find is that once a trend begins, you will find the price action tends to test it quite a bit, and it acts as a support mechanism, if you will, in an uptrend and equally a sort of ceiling in a downtrend. So you will find that. That's perfectly valid, but in terms of using it in other ways, I'm sure there are other ways of using them. as I'm sure you know, in congestion, they're not much help. But in terms of a trend, they can be helpful in that respect. The market tends to, it's almost like a retracement level that the market, the price action will tend to revisit all the time. So that's all I would say, just my general, but I'll ask Anna what she uses in a moment. Thanks, Dave. Thoughts on Globex? UK morning more civilized. That's a great word. I absolutely concur with that. Civilized is an excellent word. It is more civilized. It's more organized. It's more measured. It's more even paced. You don't get so much volatility. It may be a little bit slower, the price action. What you'll also find is that that time of day, and obviously for us in the UK, it's a great time. It will pick up, obviously, it will reflect what's gone on overnight in Asia. It will reflect sentiment. It will pick up news from China. So it picks up all the global sentiment. And to be honest, by the time the US markets have opened, all that information is pretty stale. So again, there are lots of different reasons for thinking about it, considering it, if that is a sort of market that you wish to trade. And you've got, as David said, you've got the FTSE 100, the UK markets are open. You've got the European markets, you've got the DAX and everything else. It's all there. Right, yes, I think it's future traders, 10-point stop loss, set it in stone if it goes wrong, and I'm like, right, exactly. You have to trade, if you're trading fast, literally multiple times a day, and I know that a lot of you do, which is fine. Then that's the approach you have to take. You have to set a hard stop. But if you're trading a slower time frame, then what we teach in the forex program, which applies to all markets, is forget about all this nonsense to do with risk and reward, risk and return. I've got to have a 3-to-1 risk reward, 2-to-1, 4-to-1, whatever it is. Look at the chart, study the chart, and pick off the areas of the chart that dictate whether you believe a market is going to struggle at a region or not. So when you get into, if you're looking at getting into a position and you're considering the chart over a slower time frame, you look at it from the perspective of what is the return I'm likely to gain from this position? Is there resistance in the way? Is there volume-based resistance? Is there price-based resistance? Have I got a volume point of control sitting somewhere close by? Have I got a massive amount of congestion that's going to come into play? If I haven't, and I've got clear water, and that clear water I'm comfortable with, if I've got 15 or 20 points of clear water and not much in the way, then fine. That's the decision you're going to take. But in terms of fast trading, it's very much a hard stop. Yeah, 10-point on the NQ, not on the ES. No, that's 10-point would be a huge stop on the ES, which trades in 4 ticks a point. And a lot of traders on the ES will look to make, just to put into context, they might be happy with making 3 or 4 points on the ES on a daily basis, which doesn't sound a lot. But value-wise, if you're trading multiples, it can be big. On the YM, different prospects. Maybe trading $5 a point or $25 a point. You're looking maybe 20, 30, 40 points to make. You're making decent money. You've got to have a decent stop loss associated with that, and vice versa with the NQ and the ES. Okay, let's just see what's going on. Where are we? Let's have a look. Okay, let's pop on to 2. Okay, this was nice. We had good selling under this candle. Then we had a narrow spread candle, volumes falling away. So the selling pressure is diminishing to some extent. Then we get the doji candle. It's not indicative of a reversal. It's just indicative of indecision. We've got decent volume under that. So we're expecting some congestion, possibly a reversal. We don't know what it could be. It could be either. But certainly from that perspective, there is definitely some buying coming into this region. We don't know if it's sufficient to drive the market higher, but certainly indecision at that point. You might have decided at that point to close out. You had a decent number of points. Sorry, I just moved that out of the way. It's a chat box. Out of the way. There we go. Excuse me. The trend monitor is still bright red. This is on 2-minute, but there's been a lot of change on the 15-second chart. There we go, and it just really makes the point. If you're If you're a scalping trader and you're comfortable trading this sort of speed, then there's plenty of points to be made. Nice reversal, good volume under here. Rises pretty strongly. We've got these little downsides when you get this. Not much selling pressure there. It's a trade to the downside. We've got some buyers stepped in and on up we go, but no heavy selling at the moment. Now we're coming up to a pretty key area. This is an immensely strong region that we're coming up to with this red dashed line. This has been tested multiple times. It's therefore very strong. And for this market to break through, this volume has got to increase. If we see that through there, then clearly traditional technical analysis, it becomes a support platform, which is good. You can see the trend monitor transitioned. Went through the transitional colors. This is what you expect to see not every single time, but it's what you expect to see under normal conditions, but it doesn't always do that. This we went from bright red, dark blue, out the other side into bright blue, and it goes vice versa. Sometimes it pauses and goes into straight through, maybe have one transitional color and comes out the other side. There's no rule book says it has to do one or the other. You can see here what's also happened as we went into congestion. What happened? The trend monitor went into a darker blue. It said, okay, hang on a minute, we've got a bit of congestion coming up. Is this congestion going to be enough to reverse the trend? No, because we've come out in blue the other side. Trend line's pretty flat, so it's not a strong trend at the moment. This level has come into play. As you can see, it's capped it off at the moment. And that's partly the reason why, because the volume here is pretty weak. There's no anomaly there because that's a narrow spread candle and we've got low volume, but it's not strong enough to drive that through there. Now we're starting to see a little bit of transition coming in again, a little bit of weakness. And it really goes back to the whole issue of what you're trying to do as a trader, because I said this morning, I think we were looking at the euro dollar. Euro dollar on the daily chart is most definitely bearish, and there'll be traders sitting there, and I said it this morning, who will be sitting there looking at the chart, not too concerned about a minor rally of some fundamental news, whereas traders will be making money to the upside. There'll be daily traders, 4-hourly traders, hourly traders who will be quite happy with the chart structure and just accepting the fact there's a bit of fundamental news that's gone through the market, and they're still holding short positions, whereas the scalping boys have taken and girls have taken some points to the upside. That's just the nature of trading. Right now, the NQ, what are we looking at? It's bearish on this time frame. The volume's fallen away. There's no anomaly, but we've got we're coming out to the volume point of control. We've got some resistance coming into play at 44. And this is up to the very slow time frame of the 60-minute, and these are all the regions of cash markets and Globex running in tandem. So on the 60-minute time frame, we had the effort to rise, we had the big wick to the top of the candle, lots of selling under that candle. So it's not looking particularly strong at the moment, certainly on that particular time frame. Just keeping an eye on what's going on the VIX. It's coming off a little bit, which is why we're starting to see that come into play again. So we've had a bit of a rally. Markets have fallen. And now we're starting to see the VIX decline a little bit. And that's where we are at the moment. So it's all pretty sluggish, but now we're starting to see a move through here. If we get us move through here, now we have to grab some points. Got some nice support in below. Now we've breached that region. Trend monitor's transitioned back into blue again. So again, it's just really helping to keep you in a trend to try to maximize whatever is available on that trend. It's the reason we developed it. It's the hardest thing to do in trading is once you've got a position in the market and you've got some decent profit in the bank, you don't want to lose that profit. And the emotional trigger is to close out as soon as you get a reversal against you. And it's trying to help using it in a multiple time frame to prevent that occurring, to give you the confidence, if you will, to stay in. Don't have to, but that's what it's been designed for. Just have a quick look at the other indices, see if they're all probably all doing pretty much the same thing. They don't always, sometimes you get divergence. Yeah, all pretty much the same. ES maybe is showing a little bit more bullish sentiment than the NQ is a bit static. YM's okay. But they're all back to trading around either resistance levels or the volume point of control. So wherever we're trading around the volume point of control, then we're expecting the market to at least congest and move sideways. Almost certainly not going to rocket through there, purely because you've got the highest concentration of volume is where this yellow line is. That's the volume point of control. Got an absolute ton of volume above, lots of volume below. Nice platform of support here, which is helping. But the market is almost certainly going to congest around this volume point of control for the time being, which is self-evident on all these time horizons. Haven't quite got there on the NQ yet. And it's another reason you have to have multiple time frames. It tells you why a market has paused, why has it stopped, why is it? It's always the question you want to know. Why has that happened? It's the one question you have to have answered all the time. Why has the market paused? Why has it stopped? Just checking out the VIX, it's starting to fall again. It's come off the highs. It's starting to decline on the 2 minute. So we're starting to see the pickup in equities again. But again, very congested, very much sideways price action. Just going to have a quick look at, let's have a quick look at commodities. See what's happening with the dollar. Dollar's selling off pretty sharply. This is on 15 minute. Okay, so that's got up into overbought, selling off very strongly on 15. And we've now got a nice move developing on gold. Exactly the same principles, the 3 minute, 5 minute, down onto the 10 minute, and this is on the daily. In terms of the daily, it's pretty bearish. We've written about it extensively, but that's not to say there aren't moves intraday. Of course there are, and this is another nice move here. Just pull that up full size. Again, this is a classic example. We've got rising, nicely rising volume and nicely rising price spreads. It's just a nice, perfect example of what you're looking for the whole time, not only in terms of individual analysis between a candle and its associated volume bar, but also in terms of groups of candles, whether you're looking for anomalies. It's all Wickofian, it's all first, second, and third law stuff. And it's all explained in the Forex program, but it applies to all markets, whether you're a Forex trader or whether you're trading futures, whatever it may be, it doesn't matter. What's at the top of the chart is almost irrelevant. It really makes no difference other than you have to understand what contract size you're trading and all the rest of it and the margin requirements. But other than that, from a technical perspective and from a fundamental relational perspective, it's all pretty much the same. The mechanics of trading is almost identical, whatever market you're trading. There's a nice move there on gold, and that's a decent amount of money as well. We've gone from, where are we? 67 up to 71. That doesn't sound a lot, but I can tell you on a big contract that is a lot of money. 4 ounces, $4 an ounce. Okay, let's just have a quick look back on the indices. There we go. Trying to rally, but it is very much about using the faster time frames. If you have to trade on a daily basis, if you're an out-and-out scalping trader, perfectly fine, but you have to go down to the faster time frames really to make money in these sorts of markets, which is perfectly fine. It's very enjoyable. I enjoy it. As some traders do, some traders don't. It's what suits your temperament and your personality. There we go, up onto the 15-second again. We've broken through. We've gone through that region at 44. We've got a nice platform of support in place now, and we're starting to climb higher again. And I can see over on the VIX, that's now falling as well, so that's down to 1306. Trend monitor's reverted back to red, so it's just supporting the move higher for the indices, but on an intraday basis. There we go. We're going to have to wrap up and run. Let's just see if we've got any more questions. Gosh, there's one or two come in. Apologies. Let's pull those down. Okay. Let's have a look. Sergio, check oil. There's just the inventory. I will have a quick look at oil. I'm going to have a look at that. Perfect storm perhaps on gold. Yep. Absolutely. You've got the 4 p.m. What's the time now? It's come and gone. Sorry. London fix was at 4. For those of you not aware of it, again, it's a great trading opportunity, as indeed will be the 12th of December when we have the election here. So we will be up all night because it is generally speaking, not always, but generally should be a good night to trade. Could I ask on one whether to take a trade and manage it until you close out, please? Yep, not a problem. We can do it on, we have done it from time to time, so we can do it on whatever market we feel comfortable with at the time, so no problem at all. Let me just check out oil for you, Sergio, bear with me. Just go and pull that up. I think I've got it on the commodities, I think this one. There we go. What have we got? This is on, are we on the right contract? Let me just check. Yeah, I think so. Got December contract running. The 1 minute, 5 minute, and the 15 minute. We've had news, fine. What have we got? We've got volatility, typical volatility candle. Just pop that full size. There we go. Big volatility, big wick to the lower body and upper body. But that's the volatility trigger. What we're expecting is congestion. We're expecting the market to reverse inside the spread of the candle. It's as simple as that. That's what we're expecting. And we've got exactly the same on 15 minute, ton of volume coming in. It's a great opportunity for traders to, they'll be jumping into this market, shorting the market like crazy. The market's now reversed and it's going to go inside the spread of that candle and probably reverse all the way back up to the volume point of control, at which point they'll either be taken out or squeezed out, one or the other, or frightened out. Simple as that. Very simple mechanism. Volatility is about speed, nothing else. It's a market maker mechanism that is used constantly. You can see one over here. Whack, up goes the market. Everyone jumps into the long side. Bang, down it comes again. Happens all the time. It's the power of the indicator. It's a volatility indicator. It works on average true range. It's a very simple indicator. It's looking at price action across the particular instrument and time frame and telling you loud and clear, be careful and wait for the market to break away from that particular piece of price action before you actually jump in further. There we go. Hope that helps. And let's just go back to the indices if we've moved anywhere at the moment. There we go. So no, pretty much trading around where we were, but still opportunities to make money. Let's go back to the multiple time frame again, which is actually the one I wanted. That one. There we go. That's it. There we are. And we're coming up to the volume point of control on 2 minutes. So expect further congestion to follow thereafter on that one. Oops. Closed it down again. Never mind. Where's it gone? Lost it. That one. There we are. Right. Nice and neat and tidy again. Okie dokie. That's it. That's me done. I hope you've enjoyed it. We will be back next week for the London Forex session, which is 7:30 UK time. Hopefully by then our third grandchild will have arrived, bless her. But she's hanging on in there at the moment. So she'll probably arrive over the weekend, probably at midnight on Sunday, something really helpful, but there we are. Such is life. Enjoy the rest of the trading day. Thank you, Sergio, much appreciated. Enjoy the rest of the trading day and the rest of the trading week, and we will see you back next time. Thank you so much for coming along. We do appreciate you giving your time to us, and we hope we make these informative, useful, and enjoyable. So Anna's waving goodbye. We will see you soon. Thanks for now, and we will see you next week. Bye for now.